guess there's football on. Football. All right. Hey, Matt. I can't quite read. I think that says FAA. Anyway, he's CJU Con Girthman. Ham wanted me to go live this afternoon. I haven't called him yet. He's playing racquetball. But I thought I would just read this one article to start with while people come on. This is from Egon von Greyertz's website. And I'm just going to read it instead of trying to find a video because I got a strike or whatever I got, a warning for playing a video. But dated January 19th, which this past week, gold in 2025. 2024 by Ronnie Stoffel was an eventful year. Around half the world's population was called to the polls for presidential or parliamentary elections. For the first time in the history of Western democracies, there was no democracy. Oh, he didn't say that. For the first time in the history of Western democracies, every governing party lost support in the elections. Among all the changes of government, Donald Trump's return to the White House stands out. A few weeks ago, the German traffic light coalition collapsed. Germany is now voting prematurely at the end of February. For gold investors, 2024 was truly a golden year. Gold gained 27.2% in US dollar terms, 35.6% in euro terms, and 37% in Swiss francs, which means the dollar was relatively stronger, doesn't it? But basically up 30% for the year. Pretty good for something nobody talks about. The marked differences in performance in the various currencies indicate the significant exchange rate shifts between currencies last year. In US dollars, 24 was the sixth year with a positive annual performance for gold since 2016. In euro terms, it was the seventh consecutive year with positive returns. And in Swiss francs, it was comme ci, comme ça. Gold in Swiss francs has closed 7 of the past 10 years with positive returns. And in the first days of the new year, gold reached a new all-time high in euro terms. The astounding rise in the price of gold since the summer was halted by the Donald at the beginning of November. However, the dip in the final weeks of 2024 was unable to change the far above average annual performance of gold. Gold beat most other asset classes in 2024. With a clear double-digit percentage increase, gold outperformed most stock markets, which also did well. Gold was even ahead of the booming US stock market. Gold in local currency and Domestic Stock Index annual performance in 2024. Gold was up 27.2% in dollars. The US market was up 23% in dollars. I guess the German flag, I think that's the German flag, means the euro. So up 35% gold versus 18%. In the Swiss market, the market was up 4%, gold was up 37%. In China, China's market was up 15%, gold was up 30%. In Japan, their market was up 20%, and gold was up 40%. There was little movement in terms of price in long-term bonds, despite lower interest rates. However, 2024 was another year in which bonds ended the year in the red. The 10-year U.S. Treasury fell slightly, marking the third year in the past 4 in negative territory. Now he finally gets to it. Among the other precious metals, silver also had an outstanding year, gaining 20% in the United States, 30% in Europe, and 30% in Switzerland. In the wake of the bull market in precious metals, mining stocks also recorded gains. The Hui rose by as much as 13%. That's just a prelude of what's coming. Public debt continues to grow. After the impressive gold price rally last year, it should come as no great surprise if the gold price were to continue or even intensify its consolidation phase, which has been ongoing, the consolidation, since Donald Trump's re-election, following its strongest annual gain since 2010. The first trading days of the new year did not confirm the consolidation. In the medium and long term, the general conditions for gold remain positive. One structural factor supporting gold is the permanent growth of public debt, aggravated by the fact that public debt is reaching a critical level, even in industrialized countries. Kristalina Georgieva warned, as director of the IMF, with unusual urgency about the development of sovereign debt, particularly in industrialized countries. Kristalina said, quote, "Our forecasts point to an unforgiving combination of low growth and high debt, a difficult future," unquote. It is true that the growth prospects for the United States are better than most other industrialized countries, precisely because of the high budget deficits. However, an economic slowdown because of an escalation in geopolitical tensions or as a result of the broad use of tariffs announced by the Trump would also affect the United States. Let's look at this chart. The United States is purple. So the United States started at George W. Bush. We're going to give our people's money back. They're going to give our nation's money back to the people, George W. Bush. It started at, looks like 55%. Public debt as a percentage of GDP. 2 wars, tax cuts, And financial crisis later, it was at, looks like 65%. And then we got Folks and Helicopter Ben. No FDR was Folks. And so he started at public debt at 65% of GDP. And by the time old Folksy was gone, government debt was at, it looks like 105%. Public debt was 105% of GDP. And then we got the Donald, and it was basically, as a percentage, it went down a bit, up a bit, it was basically flat. And then we got Weekend at Joe's. And by the time Joe finished his, I guess this could also be blamed on the pandemic, we got up to almost 120%. Now it's been coming down, to be fair to Joe, since then, but we still remain at 110%. Our public debt is over 100% of our GDP. So what's the green one? Oh, that's Italy. That is Italy. So we're second only to Italy in percentage public debt to GDP. What's this golden one? France. Well, we're pretty much tied with France. Wait, but don't we make fun of the French for being, well, you know, French? Our situation is worse. And then what's the blue? Germany. Germany's public debt looks to be around 50% of GDP. And China, as many people are pointing out to me, is in trouble. Their debt to GDP is growing, probably a result of the GDP going down. Donald Trump, the king of debt, was reelected US president. In 2017, he moved into the White House with a US debt of just under 20 trillion. Now the debt stands at 36 trillion, or 80% higher. As a percentage of economic output, the increase is 20%. Trump cannot reject this legacy. Oh, so you're just skipping Joe? Anyway, on the contrary, it can be assumed that Trump will continue to increase it. All right, so this is going to be a negative piece on Trump. So, based on some group's projection, U.S. public debt would rise from a level of around 100% to 125% under Donald Trump. The range of proposals presented by Donald Trump during the election campaign would see the U.S. national debt rise to between 128 and 180% of GDP, with 142, I guess, most likely. In his first term of office, Donald Trump widened the deficit from 3% to 5%, and then to 15% in the first year of COVID-19 pandemic. Whether the new old president will actually implement his announcement to get the high U.S. budget deficit under control through massive spending cuts is doubtful. Given the experience of his first term in office, Europe's number one problem child, France, is also failing to get its budget under control. At around 6%, it is similar size as the United States deficit. Add to that the political instability of France. France is now on its way to becoming the new Italy, both politically and economically. However, France has a completely different, heavier political and economic weight in the EU than Italy. Germany is back on the consolidation path because of its constitutionally secured debt break. And China is supporting its weakening economy with fiscal and monetary policy measures. Accordingly, the Chinese budget deficit is steadily increasing and is likely to exceed the 6% mark. As a result, the deficits are pushing up the government debt ratio. Central banks are already cutting interest rates again. The number of 60 interest rate cuts in the fall of 2024 is the fourth fastest decline in global interest rates since the turn of the millennium. At the peak of the rate cut cycle during the global financial crisis, the number of rate cuts was only slightly higher at 76. These repeated interest rate cuts and the announcement of further interest rate cuts are surprising, in that inflation remains stubbornly high worldwide. Relief for the inflation rate has come primarily from energy prices in recent months. Core inflation in particular is proving stubborn. Core inflation has been consistently above 2.5% since May 2021, while core CPI inflation has even been above the 3% mark over the same period. The long-lasting disinflationary trend came to an end, that's opinion of course, in the summer of 2024. It is therefore not surprising that capital market interest rates, the bond market's going its own way, are developing differently from the central bank key interest rates. Since the first interest rate cut in the United States by what was a surprising 50 basis points in September of 24, the yield on the 10-year Treasury rose by 1% by the end of the year. Despite quantitative tightening, M2, a measure of money supply, rises again globally. The interest rate cuts are already having an impact on the development of the M2 money supply in the world's most important currency areas. In the summer of 24, the global money supply gained momentum, even though the Federal Reserve and the European Central Bank are continuing QT, quantitative tightening programs. And the Bank of Japan has also been reducing its balance sheet for several months. All of this cannot compensate for the People's Bank of China's expansionary course. The significant monetary stimulus measures are driving the global money supply trend. Okay, and so this is the money supply of everybody. Demand for gold remains high. Despite the soaring price of gold in 24, demand for gold remains high, although there have been notable shifts. I mean, I would note that Bitcoin is up at 3,761 tons. Total demand in the first 3 quarters of 24 set a record for the first 9 months of a calendar year. Central bank demand declined compared to 22, but remains at a very high level. After just 3 quarters, it is already certain that central bank demand for gold in 24 will be at least the 3rd strongest year since 2010, the year in which central banks became net buyers again. And that's what you're going to become, your own central bank. In October 2024, the central banks increased their gold holdings by 60 tons. In November, a further 53 tons. In addition, after pausing for a while to be jolly, the People's Bank of China also returned as a buyer. There is no end in sight to the current above average demand for gold from the central banks. On the supply side, there was an increase of 3% in gold mining and 9% in gold recycling. Conclusion: following the Donald's re-election, the long-awaited consolidation phase for gold sets in. This breather is a good sign, as this consolidation allowed speculative demand to be reduced. The foundations have thus been laid for a continuation in the upward trend in the price of gold. There are, however, some risks. A continuation of the rally in cryptocurrencies could dampen the price of gold in 25, as could the increased attractiveness of bonds because of higher yields. Or further upswings in the stock market could be attractive, as well as a stabilization in the Chinese real estate market. All in all, however, it can be assumed that the general economic and geopolitical climate will continue to support gold prices in 25, even if a repeat of the record year of 24 should not be expected. Well, we'll see about that. The following figures show that despite the record run in 24, gold is not overpriced. Adjusted for inflation, gold only reached a new all-time high in the fall of 2024, and silver's not there, by the way, replacing the all-time high from January of 1980. So gold, adjusted for inflation, in the 4th quarter of 2024 exceeded the all-time high of gold from January of 1980. In nominal terms, gold rose more than fourfold during this period, but global GDP increased more than 9-fold, and the S&P 500 almost 10-fold. The risks on the equity and bond markets, as well as a possible weakening of the US dollar following the Donald's inauguration, could give gold an additional boost. All right, enough of that. Enough of that. Hey, Augustine. Hey, Scott. All right. Let me see if I can get the hamster on, because I don't want to be on all night, although why not? No more. bells to answer.
Battery 80%.
No more
Connected
eggs
to
to
Field
fry. No more dog poop to pick up. All right, let's see if we can get ham. Oh, hang on. No more bells to answer. Hey, yeah, it didn't. Hang on. I'm going to call you right back. I got to turn this off. Oh, no. It's not giving the speaker, so sorry. I just have to try it again. I know there's some sort of football game on tonight, so I hope you get to watch it. Okay. No more eggs to fry. No more. Phone takes a while. All right, it says it's connected. I don't hear it, but all right, I'll believe it. So let's see if we can get him on the connection. We can. We can get him connected, I think.
Hello.
Hey, I don't know if you want to go live, but you are live at the moment.
Can I just get to my car and I'll call you back in like 4 minutes?
As long as you wash your hands first.
All right, I'll be right there. Goodbye.
All right. Not a lot of questions. I wish I could say hi to him. Wish I could say hi to him. ¿Cómo está? Finger looks like I think it's going to go to 150. I know that doesn't sound exciting, but it's a pretty nice move. I don't know about DJT or GME. I don't know why anyone plays GME anymore. I mean, how many times you have to get hit on the head? But I suppose you could say that about any of these other stocks too. I think Railtown, look out for next trip as a trade. Look out. Nixie's gotten down. It could go a little lower, but Nixie's gotten down to where maybe it will have a bounce and a trade. Who knows? But I like Railtown the best. Railtown. And I suppose I should see if there's any news to report. I didn't like that gold article wasn't written that well, and it wasn't very hard charging. But what I got out of it, and what you should too, a couple of things you should know: gold moves in different ratios, different currencies, obviously. But the dollar's been strong. Is that going to continue? Probably under Trump, I would imagine, for a while. But I think he buried the lead. Gold finally hit an all-time high, adjusted for inflation, in the fall of last year. It hasn't happened to silver yet. That's why I think you have to own silver. That's why I think you have to own silver. So is Jennifer Aniston dating Barack Obama? I guess so.
Call from Andy.
I guess so.
Out and about. And I'm
Hello?
going to get in the car.
Hello?
So, what is everybody on?
Well, I wouldn't say everybody, but I guess there's
I don't care if
football on the weekend, but there's
No, that's
people
on-
on.
That's tomorrow. The football game's tomorrow.
No,
I think the games are both tomorrow. Tonight is watch a TV show tonight.
Some sort of football.
But anyway, let's get started here. As we said many times, the people who are holding the stock down were just trying to get people to bail, confuse you, get you to scratch your head, create this negative appearance, whatever you want to call it. That's what they do. Finger motion had enough value to be somewhere between 5 and 10. Benchmark gave it a value of 5. The company's announced raised money, announced deals, and the stock is $1.15. It doesn't make any sense. Now, I know most people want to buy something that's moving as momentum plays, but I told you this was not a momentum play. It's an accumulation play. So the stock starts to bounce back up above some sort of level that people think is a technical level. And I'm not a chart person. It's very difficult to read or chart financial fraud. I keep telling you that. Stocks can look good one day and look terrible the next day. For example, NNIX, I think that's the symbol.
NIXX.
NIXX. We heard that there was a big buyer. It took it up to 5. I had people buy some stock. The next day, they pushed it down to 3. Stocks do not have that type of volatility over no news, over nothing. That's just pure manipulation. And if you can understand it, you can trade it. If you don't understand it, you'll get caught in it every time, 10 out of 10 times, because it's a false positive or a negative, and it just basically it screws your head up. Because as an investor, you're trying to manage your money, not trying to lose it all. And they get you to buy a stock on the volume, but all of a sudden they pull the plug out and you're down $1. That's how fast it happens. So again, finger motion is now showing the signs that it's turning up finally, and the shorts I think have given up trying to sell stock at $1.10. They tried to do the same thing when it was 2. They were trying to break it below 2. They didn't succeed in breaking it below 2. The only reason it went below 2 because the company sold stock at $1.50. So that was the reasoning to attack it, to knock it below 2. Otherwise, we would have been firmly above 2. As we saw, we started to run to 260 that day. That's all behind us now. The company has $5 million more in the bank. And because of the money, the company now is now announcing more deals. The deals will bring in the revenue will bring in the profit, and there's the company into the final chapter, off to the races. And to me, again, I'm not selling you a fundamental play. I believe I'm here for the short squeeze, but it's great to have the fundamental value that we can all see and talk about, that basically takes away the downside risk, which we just happen to all see. And if you worked on Wall Street, when there's a secondary, whatever the price is that secondary is, that is the floor. Remember, someone just put $5 million in at $1.50. Some of you bought 100,000 shares. Some of us bought 10,000 or 5,000. I think someone putting up $5 million has a pretty good idea why they invested in this company. They may not be here for 100 years, but they were comfortable enough to put up the $5 million. Imagine you put up the $5 million at $1.50 in the stock. The next day opens up at 0 or a penny. These guys had assurances that that stuff wouldn't happen. And I'm sure, what's the hell is the name of the firm? What's the name of the brokerage firm, William? Roth Capital. No, Roth Capital. I'm sure Roth Capital did their due diligence with it. Martin Chen said they love the company. And I think that unlike, a hedge fund, this is Roth Capital going to get their clients to put money in versus, this Lynn partner type deal. The company had a floor, and now the opportunities to the upside. If the company can produce as fast as they can, the upside will come faster. If Donald Trump speaks, the upside will be in seconds. When the company does its special dividend, it may take a little while, maybe another 10 days, 15 days, but I think then it takes off also. So there's a lot of positives that are leading us in the right direction. Anything you want to say, William, or anyone want to say anything?
Just one gentleman says that finger is good. No questions.
No, listen, we're trying to show you how to handle a kamikaze attack by short sellers. And that's what the worst part of this whole thing is about, is that these criminals just destroy lives and companies. William, I think I spoke with you earlier. The NASDAQ is looking for a way to get companies delisted faster. And companies below $1.
Just help out their real clientele, which are the criminal shorts.
So they're going to try to knock out companies. For example, KNW has been cratering below $1 for a long time. They're going to allow, I believe they allow the firms to do one reverse, or maybe they don't even allow it anymore. That is not going to be the way to get over the dollar margin thing, the dollar pricing. For those that don't understand, the NASDAQ and these small exchanges have requirements. If your stock is not over $1, you're going to be delisted.
Do you think the CEOs? Do you think the CEOs are in on the sting operation, like KNW and the rest of them? They've got to know what happens.
I'm going to say no.
Okay.
But I'm going to say yes.
I'm saying yes, but
I'm just saying I don't believe the CEOs openly would tell anybody that they knew anything about these characters. I think they were desperate. They needed the money. The lawyers will tell the companies, hey, you're going to get a going concern if you don't raise money now.
Right. And
that's a way for the lawyers to position the companies to go down and look for the money. No one's going to invest in a company that it looks like the building's on fire. Do you want to invest when the building's on fire? Most people don't want to do it.
Right.
So they go to the people that introduce them to Lynn. Lynn will write them in a second. Phil Lavalier will come out and say it's a beautiful stock. And they'll give you that same mumbo jumbo they give everyone else. They give you the press release. And as they give you the money, you're happy. They take their fees. And it's, your stock is already cratering. And the CEO is telling his friends everything's good and people are buying it. And now everyone who bought K&W has gotten slaughtered. His friends, his family, himself, and Lynn Partners and his friends are making millions. That's just the way it goes. And that GMGI was $6. It's broken $2 now. So it's cratering. It's doing the same pattern. There's still some more meat on the bone for them to steal in GMGI. And I think that you'll see that thing to pick up pace. Once K&W does the reverse, you'll see the people in GMGI start to panic because I believe they're following what's going on now. I think they understand it now, what's going on.
Okay.
So the NASDAQ is actually walking around and putting companies on notice, I'm hearing, and there's a lot of companies in a panic right now. So be careful when you're running around trying to invest in these small caps. A lot of them are getting ready for the guillotine. So be careful. What else you got, William? Anything else?
Next naked short numbers are going to be released Monday, 1/27 after 4
Oh, no, that's the
p.m.
real short. That's
Oh,
the real
that's the
short.
real short. Okay.
I thought I posted it was supposed to be on the 24th, and today's the 26th. And Big JR seems to get it from somewhere else. I don't know where they get it from. So if anyone has the real short number, if you're listening, please post it. I would love to see it. It was
So
1,320,000.
Richard and Ace are live, I guess, right now. So Barbara, go listen to Richard or go listen to Ace. I can get Ham to
Ace just,
call into Ace, I guess. I don't know.
yeah, no problem. I'll call in another time. No big deal.
No, hey, you can call in now. You can stay here, but I don't want to confuse. I didn't know these other guys were going live. I didn't mean to interfere.
Ace had surgery on something. I don't know what he had surgery on, but he was in the hospital or something like that. He took a photo of him going in for surgery.
It was that hat on the top of his head. They had to get it off.
That had taken off his head. But he posted that everything worked out, so good for him. I don't know what happened, but Richard Hoffman is live with him.
I don't know, or it's separately. Barbara said Richard just started, and Ace, ugh, all three of you at the same time.
Well, listen, everybody's trying to do something before Saturday night, before their families.
I didn't think of it. I didn't mean to interfere with anybody else. But
yeah, we don't mean to do that. I'm not doing anything. We're running around, doing chores, and we're just doing our business. And we thought that it'll be a good time for those who have been busy at work all week to give you sort of a recap of what's going on and what we see. That's all. That's all we're trying to do. If you're busy and you want to go hear something different, go knock yourself out. We're the same thing. We tell the same story. We're just recapping that I think the Roth Capital could be the next catalyst here. I think Donald Trump speaks, it's over with in a second. I think the special dividend, there'll be a little lag of maybe 5 to 8 days, and then it'll take off. And then the company their next earnings will come out the end of the year. It's February, you said February, right?
yeah,
Am I right, William?
yeah.
Yeah, so that's the end of the year. And I think all these truck orders that they're getting will start to show up in that number. And I believe that's when we go profitable. And like my buddy said, once the companies go profitable and don't need to run around to Wall Street to go raise money to stay alive, that's when the game is over for these
Once you go profitable, you never go back. Oh, that's
right.
work.
That's exactly. Well, that's what I think is going to happen. And my friend who told me about MLSS, he is. That's what he told us in person, that he expects that to happen. MLSS, I got out of it at $1.30. For the people that paid 70 cents for it, congratulations. That's a tremendous trade. When you paid 70 cents, I did not. I paid $1.01. I made a 30% return, which is interesting. Not what I was looking for, but I was hoping to get 100%, but 30 is good enough for me. And then I told you I was putting money back into Finger. I bought it from 112 up to 122, I think, or 123. And I told everyone, you got to buy them when they don't want them. And you can see when it starts to move, everybody starts talking about it. It's, people telling me all day yesterday, I bought 3,000 more, I paid 130, I bought 4,000, 10,000. People were buying it. And you could have bought more when it was sitting there dead in the water. I could see it, one of my good friends, thinks it's going to, 154, it's going to go to 154 now, and then 154, it's going to break to 2 plus. And he's a technician. I'm not a technician. What else you got, William?
There's no real questions. They're hoping DJT would move, so take some profits.
Listen, that is a stock. I heard they're doing, we spoke to a gentleman that's working on content and acquisitions for DJT, and they're working on technology behind their platform. So they're doing a lot of things. Again, I'm not an expert on their fundamentals, but they are doing things to make things exciting. I got it. But again, all it is the naked short. I told you the naked short number was up to 2 billion. I cut it in half because I do believe the algorithms do buy back. So, and I think that they probably have bought back, I'll say half of it. So I'm saying there's 1 billion shares short, not 2. I'm saying 1, because I don't watch it as closely as I do on Finger. Finger Motion, we see them sell, and we never see them cover.
Right.
The only time they do any covering is when they are doing what? Washing trades. William, let me go over that because I explained it to someone this morning, and he didn't understand it himself. If you're short 1 million shares of a stock at 2, and the stock collapses to 50 cents, the naked short sellers will then, if they're short at 2, they'll buy it back at 50 cents. They will cover, okay? They will cover it from a different LLC. So if I'm short in account A will buy from account B. Account B will go short at 50 cents. And just say, why would they do that? Well, they close up the account. If I sold account A, sold it at $2, and I bought it back at $1.50, I make $1.50 or make $1.5 million. My position is closed. I'm free to take that money out of my account. I'm free to go. The new LLC is now short at 50 cents. And they don't care if that account blows up because they already stolen all the profit they wanted to already. Now, if the account, the second one that is now short at 50 cents, and they get a margin call, they're just going to say, hey, we have no money. Screw you. We're out. The prime broker will buy it in, and the prime broker will lose from 50 cents on the way up. Because remember, the account at $2 already covered it at 50 cents. They walked away with their profit. And that's how it works. And that's how these guys move positions around. Remember, they can't take the money until they close out the transaction. And that's why we talk about washing trades. Washing trades can be used to do 2 things: close the position or to buy more margin time. You know? That's how they do it. And when you see that being done, that's why they're doing it. They're not doing it for, fun in the sun. They're doing it to do illegal transactions, to do more of it. That's how they do it. Any questions, William?
No, it's a very obsequious. That's
well. Listen, if everyone is going, if people want to go listen to Ace and Richard, let's stop here, and I'll pick up tomorrow. If I have something good, we'll do it tomorrow. I don't want to waste everyone's time.
All right.
All right. So I'll speak to you tomorrow. All right, everyone.
All right. I hope you watch the game.
All right, William. Thank you.
All right.
All right.
Well, if you guys, you don't have to watch me. I don't know what else to go over. If I can find Yeah, I don't know what else. You guys can ask me what you'd like me to talk about. But for tomorrow, for Monday, I think NTRP, you might see some activity in that. But I like the story, but I would do, if it moves, I would use it as a trade. Because I think they'll raise money, but it could be fun. But Railtown is the one I would buy. Aw, no, I bet she is. Good girl. All right, Augustine. I hope everybody watches the football game, whoever it is playing. I don't know. Ham wanted to go on, and now he's gone off. So I didn't really make a list of things to go over. I'd like us to make some money, and then we can talk about where to put it. Trump is going to be in lost wages, I think, today. Yeah. All right. I guess we'll let Ham just texted me. He said, let Richard and Ace talk. So that's what we'll do. I'll sign out so that you can go listen to Ace and or Richard. I don't want to interfere. CJYL filed their annual report. Well, let's look at that tomorrow or on Monday. Ham's right. I shouldn't interfere with Ace or Richard. It's too bad. I was just getting warm. $0.02 profit per share. All right. No dilution. No dilution is the solution. All right. Anyway, go listen to, no tax on tips. It sounds like the United States is going to go into its last phase of really pushing the world to take our dollars without taxing ourselves. So we'll see if it works. Anyway, as much as I'd like to stay on for a while longer, I didn't expect Ham to drop off. So we'll do it tomorrow or we'll do it on Monday. Go listen to Ace, go listen to Richard Hoffman, and we'll catch you on the flip side. Thank you.